Good morning, everyone. My name is Keith Nare. I'm the research director at the Africa Gold Council, and today I have an esteemed panel. Abdallah, welcome. It's a pleasure to have you. Grant, welcome. It's a pleasure to have you. And I think I'll try and set the tone where our session is the gold value chain integration into market ecosystems. So let me start by giving a synopsis. Africa's gold market is the continent's greatest untapped financial frontier. Despite being a leading producer, Africa forfeits value by exporting raw gold for refining, trading, and price discovery in offshore hubs. With only a handful of refineries and commodity exchanges, Africa lacks exchanges and credible gold exchanges that can anchor its role in global markets. The future lies in building sovereign gold and mineral-focused exchanges, integrated with accredited local refineries and locally financed value chains. By embedding gold into Africa's own commodity exchange systems as both a monetary and investment asset, the continent can transform its gold sector from an export-dependent supply chain into a strategic driver of resilience, liquidity, and global influence. So what we're trying to interrogate with my panelists, starting off with Abdallah, I'll obviously ask you questions, and I just want you to bring yourselves in the context of what you're doing and also what you project the future would be. So I'll start off with Abdallah. Look, Africa consistently sees the highest discovery rates per dollar spent, yet receives the lowest share of global exploration budgets. How can African capital markets be incentivized to fund high-risk junior miners to ensure we own the mines of the future rather than just hosting them?
Thank you very much, and thank you very much for having us here today. If I answer your question, it's not the lack of actually. There are a couple of things that we're having issues coming from background of gold trading. So I'm second generation gold trading family. The issue we have in Africa is mostly liquidity and also capital raise. So how do we overcome that? I believe we have to have a blended sort of financing. So the main issues and the main obstacles of financing gold, or it's the earlier stages, explorations, and that is where most companies fail, especially when it comes to artisanal miners or small-scale miners. That's where the issue is. So I believe there's a role for government and there's a role for hedge funds or international investors. If I come to the government, first and foremost, there has to be a legislation which is easier for people to apply and get approvals easily. And also, most of the risk comes from the exploration and earlier stages. So my belief is that big hedge funds or government have to take the brunt of the main financing head on. And understanding gold can be really game changer for Africa. Governments are looking to raise money and to build infrastructures and all of that. And what they can actually do is that, first and foremost, understand the magnitude that they can have, but they have to spend. So, for example, I'm a miner as well of ourselves, so it's always difficult to raise money from the banks because they will always ask you, they always want a return ahead. So, where we are mining, we're actually spending our own money, doing our own discovery. So the challenge is the legislation as well as liquidity. So I believe the government, African governments can help in terms of legislation and also in terms of raising funds.
Thank you, Abdallah. Very concrete, very solid. Over to you, Grant. Grant, If 75% of global gold supply comes from mining, but Africa exports its dough raw, are we merely mining for the world while ceding price discovery to London and Dubai? What one policy shift would force the retention of this value onshore?
Yeah, thank you for the question, and good morning, everybody. I think it's, for me, when you export unrefined gold out of Africa, you're not just exporting the unrefined bar, you're exporting the entire ecosystem that sits behind there. The liquidity, the settlement, the hedging, the pricing, all of that gets exported together with that product. And the world makes money, and Africa just gets the price it gets. And this is a tragedy. And I can't tell you how many times I've heard people in Africa say, the solution is let's just build refineries. We'll build refineries. We'll get some money, we'll build refineries. It's not the problem that needs to be solved. We need liquidity. We need real investment into these markets so that we can buy gold locally and export it. Without getting that there, we are not going to solve this problem simply by just building refineries. I mean, the price in this gold market, it is not a fixed price, a standard price. It goes all over the place. If you're buying gold that has no KYC from a Kara red risk country, and you're trying to sell it in the world markets, you're going to sit down on the bottom ladder of that price ladder. But if you're getting gold from a listed entity in a good market, you're going to get a different price. And what we need to do is get Africa to move up that ladder and move up that price. And there are mechanisms to do that. And I suppose for me, the most important one is how do we look at governments to use tax policy to encourage beneficiation and value add? If it's the same whether you export unrefined or you export refined or you export jewelry, there's no incentive to do anything differently. And you just continue doing what we've been doing for years. Here in South Africa, I think we're lucky. We do have a staged price in terms of the taxation on export of gold. And that has encouraged for many years that we will add value to our minerals and we'll refine it. And so refineries are built because markets will move based on what is the most capital efficient thing to do. And I think that's where, for me, the biggest opportunity lies. If we can get the taxation structures and policies correct around royalties, I think you can encourage markets to invest in refining locally. And that starts bringing the rest of that ecosystem in play. Buyers, hedgers, traders, financiers, they all start coming because it makes more financial sense to do it locally. I mean, in South Africa now, we will very rarely export anything that's not 4/9 gold. Not because it's the right thing to do, but because we make more money. And more money means that we pay more tax, we employ more people. For me, the best thing that we can do, the highest margin that we can get for Africa, is exporting jewelry, minted bars. Then we're getting pricing that is far above the spot price, and that's where we want to play. But I think it starts with creating an ecosystem that encourages investment and encourages Africa to do something with its minerals, other than just letting the world take it. Maybe there's a good reason that there's not that many foreigners in the audience here today. They don't want Africa to succeed. Maybe that's part of the problem.
Thanks, Grant. Much appreciated. I think contextually, I think the snippets that are coming from you is we have to take ownership. We have to be intentional about what we're doing when it comes to the gold ecosystem. So brilliant, brilliant coming from you. Back to you, Abdallah. So Africa has only one LBMA accredited refinery. Is the solution to build more refineries, or is it a liquidity crunch where local refineries simply cannot compete with the immediate cash offers from offshore buyers?
Thank you again. I'm being part of the offshore buyers, by the way, based in Dubai. So I'll speak through experience. First and foremost is liquidity. Second, also security is there. But the main issue, there's a lot of barriers, as Korsas have already said. There's a lot of barriers that don't need Africa to succeed, which is obvious to see. So how do we overcome that? We overcome that to make legislations that actually, for example, if I'm buying gold, I supposed to have clarity where I'm buying the gold from, traceability, and all of that. In order for me to have that, then I have to have security. I mean, and especially in Africa where the gold has been mined, there's a lot of vested interest, whether it's governmental or whatever. So that's also another challenge. But it's a challenge we must overcome. And I believe how we overcome is to have a clarity of legislation. So for example, if we have exchanges which are fully licensed, fully KYC'd. So for example, let's say you are a miner, I'm an exchanger. So the rule would have been if we create an ecosystem where there's a KYC, so where the gold is coming from, how we pay it for it. So for example, if I'm an exchange, I'm supposed to have a liquidity. And where would I find the liquidity? I have to find the liquidity from the bank. So we have to create an ecosystem. Just to give you an idea, as a company, we're coming up an application where you can actually buy gold safely by physics. So you buy gold digitally, but it's physically backed. So that means that gold is somewhere safe in a third-party vault. So we are trying to do our bit where we can create an ecosystem. But we have to create an ecosystem. For example, some African countries, we bring out gold as scrap gold, and then we manufacture outside of the continent, and we bring it back. The problem is, when we bring that gold back, in my country, for example, I'm from Somaliland. So in my country, if I'm bringing gold back, they will have to charge 5%. So I have to say, okay, I'm taking gold back, I'm taking gold out to refine, manufacture, and bring it back. So legislation is always there because it's not making it easy. So instead of us manufacturing that gold outside, why can't we not do it in home, and we trade it in because there's a lot of gold goes out from Africa and comes back in a jewelry form. So there's a lot of ways that we can overcome that, but main thing is to create an ecosystem. I believe so.
Thanks, Abdallah. Over to you, Grant. So we're looking at the informality trap. When gold bypasses formal markets, is it really a compliance failure or a market failure? And what would a system designed for speed, trust, and fair pricing actually look like?
Yeah, I think in there is a really important thing around Africa. How many formal supply chains have been built? If you don't create formal supply chains that are easy for miners to participate in, what ends up happening? They move to the path of least resistance, which is often informality. And it's hard to blame them all the time. And the informality supply chains are there because people have resource and they want to get value for that resource. And we are not creating good enough formal supply chains in these African markets in order to get metal to move efficiently. And even if those formal supply chains are built, you have to ask yourselves, are they priced and as efficient as the informal ones? It's no good that we have massive royalty taxation on mines in Africa without policing that is enabling proper enforcement, and then the informality of the informal supply chain will take over because it's just so much cost barrier that exists there. So for me, it really sits around market design. We need to design these supply chains better. Fundamentally, I see that we have large communities, chiefdoms in Africa, where people have mining licenses, their chiefs have given them access to liberate those minerals and get some value to put food on their table. Going ahead and prosecuting them is not the solution for Africa. We've got to liberate those minerals through these people in Africa so that they can send their kids to school. They can put food on their table. Now, how do we do that? We have to build formal supply chains. And that means they've got to get assay labs into these countries. They've got to get financing structures into these countries, and price discovery has to come into the countries. This has got to be part of the solution. I know that there's many artisanal miners who have a parcel of metal. They don't know what to do with it. They don't know how much metal is in there. So they've got to fly to some markets in the Middle East in a backpack to go and say, well, how much gold have I got here? I don't really know. And then they go and assay it, and whilst they're there, they might as well get paid. But if you offer them an efficient, price competitive, formal supply chain, I believe the volumes will flow through that supply chain. But we haven't created those, and that's what we have to do. For me, I don't want to see a market where we have desperate criminals running around. I want to see thriving communities getting value out of the gold ecosystem. And that's got to come through market design, not just running around with a big hammer trying to keep everybody in their place.
Thank you, Grant. Really spot on. The last question to you, Abdallah. So the ASGM opportunity, artisanal small-scale gold mining. So artisanal small-scale gold mining is often treated as a problem rather than an asset. How can we use commodity exchanges to formalize the sector and turn it into a transparent feeder for national gold reserves?
Thank you again. It's all comes back again into the ecosystem. So, by the way, artisanal miners are the discoveries. So, if there was no artisanal mine, there would be no gold. There would be nothing. So, but we make them. We call them illegals. It should never ever have that kind of name, illegals. You should never have, because if there was no artisanal mines, there were no discovery. So first and foremost, they are very prized asset that we need to cherish. Second thing, how do we formalize it? How do we formalize them? That's the question. We can make them into associations. We can sample some sort of organization. So for example, if there are 10 miners here, give them an association, give them a name, give them some sort of structure, and then, in my opinion, they have to take that into the banks and say, okay, let's say we are producing 10 kgs a month. If they produce, let's say, 3-4 months on that scale, they're supposed to get liquidity against their assets. So, for example, if they're bringing 10 kilos a month, and if that's a sustainability, and if they can do that, why shouldn't the bank help them? Why shouldn't the bank give them liquidity so they can do more? So instead of them waiting to bring the gold and sell it, why can't they not get an advance payment so where they can mine? And in that sense, all the illegality goes away. All the issues of criminality goes away, because now they form some sort of semblance as an organization, and that taboo is gone. So in my opinion, that should have been that should have been done, and that's what needs to be done. And at the same time, from the government side, they should make it easier, because small-scale miners and large-scale miners are totally two different lives. But in Africa, we treat them similar. We call them miners. No, small-scale miners are babies. So how do you look after babies, and how do you look after a grown-up person? So there should be an entire definition of what artisanal mines and small-scale mines and large-scale miners are. And most of the artisanal and small-scale miners actually die earlier because they don't have the liquidity to sustain. And then they have to worry about the law, they have to worry about this. So in my opinion, we have to put them in a structural and organization way. In that sense, I think there will be a lot of change. Yeah.
Thanks, Abdallah. Parting shot from you, Grant. The jewelry irony. Africa is a massive importer of finished jewelry, often made from African gold. How do we catalyze a domestic cultural economy for gold that mirrors India's model of treating jewelry as critical household capital?
Yeah, that's a sore point. I think, here in South Africa, we've been mining gold for over 100 years. And that gold's flown out into the market. It gets refined to 4/9s, typically elsewhere in the world. Gets sent to places like Hong Kong, Thailand, Italy, fabricated into jewelry items that we import back and we wear. And for me, that's a tragedy of market design, that we haven't been able to use our minerals to build economies and build industries locally here. And I've often been faced with that question about why. And people say, well, no one wants to invest in assets. Well, I think you need to create the market so that people can invest in those assets and build the jewelry manufacturing facilities that are required. It is a possible thing to solve. If I think about markets like India and South Africa, they fundamentally view jewelry in a slightly different way. I think if you look at South Africa, what is the biggest selling jewelry brand that exists here? It's costume jewelry. Why? And I think there's this distinction between the visual look and feel of jewelry, which is a pretty thing, versus a store of wealth. And in some African markets, I think they've made that migration. Nero was talking about it on Sunday evening. This migration towards jewelry is not just a pretty thing. It's a store of wealth for that moment when you deeply need it. India is there. I think in some African markets, we haven't converted into that paradigm shift. It's starting, but here in South Africa is a good reason why costume jewelry is the biggest jewelry shop. It's the perception of jewelry is not there that it's a financial store of wealth in the same way you find it in India and other markets in Africa. And we have to change that perception. It's starting now. I mean, we've seen a massive surge in people, African people, wanting to own a piece of their land. They want to have a 1-ounce gold coin. They want to own some silver that comes from their community, or where we're mining platinum up at the sort of Royal Bafokeng area or where Valterra is. People want to own a piece of their land and say, I come from this area. I have a piece of value, a store of wealth. And I think that will migrate from precious metals in the form of minted bars and coins, and eventually I think jewelry will take its rightful place as being not only a pretty thing, but a store of wealth. We also have this very big problem that importation of jewelry is a bit of a dark space. As a refiner, we sometimes see imported jewelry brands that are not 18 karat. They are below carat. And that's a failure of our systems to be able to check that. Other markets have hallmarking. Hallmarking is a good initiative to check that the legitimacy of those jewelry items coming across the border is on spec and local producers can compete on a fair playing ground. Doing random samples to check these qualities of these metals coming in is an important thing that we need to do. And then fundamentally, we need to build brands in Africa. Yeah, we've got amazing artists, great people with unbelievable heritage and color, and we buy European jewelry. I don't understand why that's something we haven't been able to crack yet. We need to get Africa's designers to build brands that we can buy and that we can trust, that sit alongside the European brands. I've been to many shows overseas, Hong Kong, Las Vegas, Vincenza in Italy, and I see so many European-style jewelry, center stone with a beautiful white gold ring. But what I don't see is Africa standing up on that global stage in the jewelry market. You don't see the color, the shapes that we have in this country. And I think the world wants it. We just got to produce it. And that has to start happening. And it starts with, like I was saying earlier, taxation policies that need to come into play, royalties need to be ever looked at. Then it encourages us to start making 4/9s gold instead of exporting alloys of 95% or 99.5%. And when we're at that level of producing pure gold and pure silver, then these jewelry companies can start taking root and the designers can come in and the brands can come in, and we start building this ecosystem that we all so desire to have. There's no reason that I've seen that Africa cannot produce world-class, high-quality jewelry that can sit alongside everybody else in the world and have its place on that world market. It's a possibility that exists.
Thank you, Grant. I think your parting shot is, call to action, and surely that's why the AGC has been formed. Abdallah, it's been a pleasure. Thank you, and yeah, thank you very much.